let's bring policy on one thing and get that done. And what I'd like that to be is stable coins, because as a payment system right now, it would be very, very productive to bring forward some policy on stable coins and let the market compete. Now, I personally prefer ones that are backed by hard assets like the US dollar, but there's many ideas out there. Some work, some don't. Obviously, what happened with Luna was a bad outcome, but that's okay. This is a nascent industry, and we're trying different ideas, but the need for an international payment system is so huge and such a huge opportunity to save costs, to provide transparency, auditability, liquidity, speed, all of those things. That's what I'm suggesting. Let's pick one thing and bring policy on stablecoins. Let's nail that, and then we'll move into Bitcoin, we'll move into blockchain, we'll move into other things, but NFTs, but let's nail one thing. And so for all the excitement about Bitcoin, 800 billion, that is absolutely a giant nothing burger. It is totally irrelevant. It's not held by any institutions that matter. Now, I'm an indexer, and I've talked about this many, many times. There's many indexers in the world, but we service sovereign funds pension plans. Let's say you're an oil-rich country in the Middle East. You're making 250 million cash a day, US dollars, in oil revenues. You don't want to reinvest in oil. You want to invest in every other sector. So they'll go to an indexer like me and say, index the S&P 500, less energy, less airlines. That's the kind of index we do. And so we see these fund flows, trillions of dollars of fund flows every year just going through the system. Indexers see that every 24 hours. And I always ask these institutions and these sovereign funds, what allocation would you put into Bitcoin? Just one. Bitcoin, which is the granddaddy digital asset, everybody knows that. What would you allocate if you could? And they said, well, we can't because our compliance department won't allow it, because the SEC hasn't ruled on it yet, and Larry Fink doesn't like it, and he's our biggest money manager, and all those other reasons. But they would allocate 50 to 100 basis points, because the largest economy on earth is financial services. I think crypto will be the 12th sector of the economy within 10 years, because it adds so much liquidity, so much productivity, so much transparency, so much auditability. It's so much better than what we're doing right now, which is so expensive and so slow. If I want to transfer capital over to Zurich to buy Nestle stock in Swiss francs, it takes me days, and it costs me a fortune, and it's incredibly inefficient. I could do it in 2 seconds with a stable coin, and I can't yet because we don't have policy on both sides of the ocean that let me do that, but it's coming one day. And I think crypto and blockchain and the services and financial transactions, microtransactions, all of it are going to lend itself to this blockchain auditability, transparency, the ledger system. It all makes sense to me, and I think regulators are starting to figure that out. So I'm an investor. I'm constantly trying to find a way, the path of least resistance, to invest my capital, redeploy it. I have to look around the world for opportunities. I have to be diverse. And, you know, crypto to me, when it was being frowned upon by regulators in a very harsh way, if you recall, 2017 was probably the height of when regulators were clamping down on tokens and different ways to tokenize assets like hotels and everything else back then. And as a result, I'm so involved in the traditional financial services market, where I'm highly regulated and I have to report almost monthly to both my internal auditors, compliance department, and external regulators all around the world, that's the world I'm used to. And I saw no relief coming from regulators. And then what turned me around, what changed me completely, was when the Canadians, the OSC, granted the very first crypto exchange license attached to a dealer broker. If you're running, you know, a mandate such as a sovereign fund, let me give you the rules by which those big boys play. And I'm using the same philosophy for crypto. We have 11 sectors in the S&P 500. Portfolio theory would tell you never more than 20% in any one sector, never more than 5% in any one stock or bond. That's diversification. And that's basically how 99% of sovereign wealth is managed by indexers like me and many others that are like me. And so I've done the same thing in crypto. I've said, okay, I think crypto will be the 12th sector of the economy in 10 years. I'm going to treat it that way now in the operating company. That means I can put up to 20% of our operating capital into the crypto space, and then I want diversification. So I've basically done exactly that. My largest holdings right now are Ethereum and Bitcoin. That's not a big surprise, but I also have a big position in USDC, big position in FTX as an equity, which is a private company. Well, obviously, when new projects come to market, I'm very fortunate. I see pretty well every deal. And there's a reason for that. There's a direct correlation between market capitalization and telling the company's story. Everybody knows I have millions of followers, millions of investors, and I like to talk about the cooking I eat. I mean, I don't invest in projects that I don't use. I don't care whether it's a product or it's a crypto product or whatever. You don't see me in a lot of these very speculative tokens because I don't use them. I'm looking for value there. I'm intrigued by the NFT market in authentication of physical assets around the watch industry. That's a space I'm very involved in. That's a private investment along with other giant collectors and watchmakers and horological societies. But that's just my personal interest. So it's the things that I really want to dig into, that I invest in. But you're right, there's a lot of room for private projects because, I look at it this way. You talk to any grad coming out of MIT or Waterloo or Temple or McGill or any of these really high-end engineering colleges and universities. Well, I give an example that everybody can relate to because in the early years of Amazon 18 years ago, I was a shareholder both in the equity and in the preference shares they used to have in those days. That stock corrected every 12 to 18 months between 38 and 58% every single year, over and over and over again. People just couldn't get their heads around what Amazon was doing. And it continued that way for a decade. It's no different than what's going on right now with Bitcoin and other cryptocurrencies because there's no institutional demand yet for the product. People keep saying institutions are involved, but they're not. Not at all. And so if we get one of these bills passed here in Washington, which is why I'm here, I would love to see this agenda item move forward so it can be decided on after the midterms. I'm sure Biden's very, very busy on other issues right now, but this isn't going away, and these senators and congressmen and women know this. One word: education. This is the most misunderstood sector of the economy that's ever existed because of the complexity of how it works. Basically, policymakers do not understand it, and when you don't understand something, you tend to mistrust it. It requires education. It's taken me years and a lot of hours of reading and a tremendous amount of travel to get to the place where I'm comfortable making these investments now and understand how this works. But that's not easy to do. And the whole idea of a centralized and decentralized wallet, very many people don't understand the differences between it. And yet you need both in the crypto environment. You really want both. It's one of the biggest investment theses I have about investing in WonderFi was it gave me both. There's a decentralized wallet, there's a centralized wallet. And I don't want to lose those customers. If all of a sudden you started by setting yourself up on BitBuy, which is the Canadian regulated centralized wallet, it was really out of need. I mean, USDC, for example, and what Circle has done with their corporate accounts. I was very early on that platform, spent a lot of time with management talking about how we could make this work with compliance departments, how we could make it work with audit firms. Because the first thing that happens when you take a new asset class and you call up your auditor or your regulator or your compliance department, say, look, I want to transfer 5% of our cash into USDC. They say, what? Where's the compliance infrastructure that marks to market that at 4 o'clock?